Over the past week, the oil market has experienced a notable surge, with light crude oil futures surpassing $80 per barrel, marking the highest point since November. This bullish momentum is fueled by strong U.S. demand and a more optimistic outlook for global oil consumption. Recent data from the International Energy Agency revealed a surprise decline in U.S. crude inventories, dropping by 1.5 million barrels last week, instead of the expected 1.3 million barrel increase. The EIA also revised its 2024 global oil demand forecast upward to 1.3 million barrels per day, from the previous estimate of 1.2 million, and adjusted its projection for this year to a slight deficit instead of a surplus. This week, oil prices were also supported by Ukrainian drone attacks on Russian refineries, causing a fire at Rosneft's largest refinery. Also, ongoing geopolitical tensions in the Middle East and the decision by OPEC Plus to extend supply cuts further contributed to the strength in oil prices. Oil traders are closely monitoring the Federal Reserve's monetary policy, which remains a focal point. The uncertainty surrounding potential interest rate cuts due to persistent high inflation is notable. Lower rates could stimulate the U.S. economy, potentially increasing oil demand. Concurrently, the strengthening U.S. dollar has complicated matters, as a stronger dollar typically raises oil prices for holders of other currencies. Nevertheless, this has not significantly dampened the bullish sentiment in the oil market thus far. The U.S. oil industry is demonstrating heightened activity as energy companies have added the largest number of oil and natural gas rigs in a single week since September. The increase in the oil rig count, reaching its highest level in 6 months, reflects a proactive response to current market conditions. This surge in U.S. production efforts is in line with the global trend of tightening supply and strong demand. Looking forward, the weekly outlook for the oil market leans predominantly bullish as traders stay focused on rising demand and tensions in the Middle East. This, coupled with healthy refining margins and high crack spreads, indicates that oil prices are poised to continue their upward trajectory in the upcoming week. The technical picture looks bullish as WTI oil managed to stay above the resistance at $80. The 50-week moving average is acting as a supportive level at the $78 mark. If crude oil can sustain this upward momentum, and I believe it can, it is highly likely that WTI will eventually climb as high as $95 sometime this year. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.